Good evening, everyone, and welcome back to market analysis from elliottsignals.com. Today, we want to discuss different markets according to the Elliott counts, so that we can help some traders and try to be accurate as much as possible. We will start with the yen. As I have shown you in the last videos, we are in wave 3. We are in wave 3, corrective wave 3 for the yen. We will start from this bottom and give you a quick view about the count. As I told you from previous video, this is wave 1. This is wave 2. Let me change the color so that can be clear for everybody. This is wave 1. This is short wave 2. This is wave 3. This is wave 4 in the form of running flat. In the form of running a flat. And this is wave 5. This is very clear and impulsive 5 waves to the upside. The next move for the yen was ABC to the downside. So let me change the color because some people told me the blue color is not clear. Okay. This is A, this is B, and this is C. As we see, this is wave A in the form of ABC, 2 legs to the upside. This is A, this is B, and this is C. Wave B also in the form of 2 legs to the upside. This is A, B, C. And wave 5 in the form of 5 contracting legs to the downside. This is 1, this is 2, this is 3, this is 4, and this is 5. In the form of contracting, ending diagonal to the downside. So the whole structure is like this. This is 1, this is 2, this is 1, and this is wave 2. Now let's move into lower time frames so that we make things more clear and show you how can we make our trades. Let me do 1 hour time frame. This is the contracting diagonal I have told you about, and after finishing this contracting diagonal for wave C of wave 2, an impulse appeared over there showing 5 legs to the upside from this bottom to the upside. This is 1, this is 2, this is 3, this is 4, and this is 5. 1, 2, 3, 4, and 5. Okay, and the whole structure is wave 1. And as told you in the the last video, we have an impulse to the downside for wave 2 in the form of 5 legs. This is in the form of 2 legs, and the last 5 legs to the downside as shown. So the whole wave structure, this is a corrective flag to the upside. So our next move, and I told you to have a sell position right from this position and close from equal links between A and C, and the price bounced very fast from this area and announced the beginning of wave 3 to the upside. So our next move is like this. This is 1, this is 2, and the price should move very fast and aggressively to the upside. Our invalidation point for this count is right there. Since we made the possibility of making wave 2 as a complex is still available. So our invalidation point is around 109.70. But I don't think, according to the dollar index Elliott count, I don't think the price is going to make extra corrections, since we have something called the markets correlation. Market correlations telling us that the yen should move for this week aggressively to the upside, gaining more and more strength. Let's move to Swiss franc, and as I shown you from the last videos, we are making ABC corrective up to the upside. This is A, the whole structure is A. This is A, this is B, and this is C, impulsive to the upside. And the next corrective movement is called expanded flat. This is A, this is B, where B exceeded slightly above the start of C. And this is our wave C that is formed in 5 legs. As told you from the previous week, we may have a sell position from right there, and told you that the price will not exceed this bottom, get away from that bottom only in a few pips. Why? Because we have in corrective structure, we have wave equality. If we measure the wave A to the wave C, we should see our blue box or reversal zone from this area. From this area. Let me correct the FIFO. This is A, and as told you from, this is most probably is an triangle for wave B. So this is triangle contracting a triangle for wave B. So from this point to the downside, we should see 1, 2, 3, 4, and 5. Let's go back to wave equality. This is wave A, and in the relation to wave C, as we see wave C, our blue box and reversal zone should be, sorry, I'm mistaken again from this area. Okay, our reversal zone should be between an equal legs between wave A and C, and it might extend slightly to 123.6 in relation to wave A. So wave A equal in relation to wave C. So what is next move? Let's go to lower time frame and make things more clear. As shown you the 5 waves. There is the 5 waves. 5 waves. This is 1, this is 2, this is 3, this is 4. This is 1, this is 2, this is 3, this is 4, and this is 5. As we see, wave 5 is extended 5 waves composed of 5. Wave 3 is extended 5 waves composed of 3 waves. This is 1, this is 2, this is 3, this is 4, and this is 5 for wave 3. Anyhow, our next move should be aggressive to the upside in equal legs between. This is, we will show you in details. Okay, this is the whole structure. This is wave A, this is wave B in the form of expanded flat, in the form of expanded flat right there. So price should move aggressively to the upside, and as shown you, this is A, this is B, and this is C. Our C leg should at least, our targets 61.8 from this leg. This is our first target, or equality between wave A and wave C. I will show you in time the exact. Targets once the price started to move impulsively to the upside. Is this wave B ended 100%? Of course not. It might be complex wave. We might see an extra ABC leg to the upside, then to the downside, but we'll not talk about this right now. We will make it simple as much as possible and try to follow the price action and market correlation, and saying that this correction wave B has ended. That's all about Swiss franc. Let me move to euro. Okay. We have some change in euro structure actually. I have shown you, first of all, I will stress and focus on this point, and this is my view for trading this any market. We have to be adaptable and flexible as according to the price movement. We have a very important news in the Friday non-farm payroll, and the price failed to make our anticipated corrective structure. For me, we will take only this piece of correction for this piece in 1 hour time frame and show you what is happening and what happened right there. This is, as shown you, this is wave A, B, and C. This A, the whole corrective structure, and I have shown you in the last video, we might see another making this W and this X, and we might see another ABC to the downside. But the possibility of making this this leg to the upside has been very negligible because of the news on the Friday. So what's the new situation we have right there? As told you, we have to be adaptable to the market. Okay. So we have make an ABC to the upside, and the whole structure has been ended. We will not gonna see an extra leg ABC to the upside, and if we pay more focus to this, I will show you why. If we pay more attention to this leak to the upside, we will discover something, and I will show you in a 15 time frame. We thought, I told you from the last video, this is an ABC movement, but actually it was not an ABC. This is A, B, 1, 2, 3, 4, 5, and this corrective, this count is not right. Is not right. The right count is like this. This is 1. This is 2 in the form of running flat. This is a 3, this is 4, and this is 5. So I will make it more clear. This is wave 1, this is wave 2, this is wave 3, and this is wave 4, and this is 5. For wave 2, this is all corrective structure is known as running flat. Our next move was like this: A, B, C to the upside. So the whole structure, this is 1, this is 2, and the price should go to the downside. For those who took a long position, they can exit with a small loss and reverse their orders. This is the correct count for the Euro USD. This is 1, this is 2, this is 3, this is 4, and this is 5. We have 2 in the form of expanded, sorry, in the form of running flat. 1, 2, 3, 4, and 5. And this is, change the color. Okay, this is A, this is B, and C in the form of 5 legs to the upside. Then we have started with wave 1, wave 2, and the price started to move impulsively to the downside. That's all about Euro. So shorts only for Euro USD. Let's move into bound. Bound, the same thing. We have a change in corrective structures since the price failed to make the impulse to the upside. I have shown you that we might have extra leg to the upside from this position, but I don't think this will happen from this position. So for those people who longs with me, they can take with minimal profits and revert the position. Why? Because the whole structure, this is A, this is B, and this is C. Wave B in the form of a triangle A, B, C, D, and E. So the whole corrective has been ended at this stage, A, B, C, and we have seen 5 impulses, 5 waves to the downside. 1, 2, 3, 4, 5. This is A, B, C. I will show you in 15 minutes time frame to make things clear about this count. We have here from this stop moving to the downside. Okay, a moment. This is wave 1, 2, 3, 4, and 5. This is wave A. We have a triangle for wave B, and or this is wave B and C. So the whole structure will be like this. This is wave 1, This is wave 2. Wave 1, 5 waves. Wave 2, A, B, C, where wave B in the form of triangle. So we should have a strong movement to the downside next week. Our entry position, I think, this is a very good entry point for sellers, or they can wait for corrections or flags and enter the markets. So for pound dollar, we have only sells only for the pound. This is the whole piece, corrective piece. As we see, this is A, B, C to the upside. We have broken the trend line. We have impulse to the downside. Then A, B, C to the upside, testing the trend line and failing to close above this trend line twice. So our next move should be impulsively and strongly to the downside. That's all about pound. Let me move to Aussie dollar. Actually, Aussie is straightforward bearish movement. The whole movement is like this. This is A, B, and C. This is the first corrective structure. The whole structure, this is A, and we should see equal legs between wave A and C, and we are now in wave C, which is moving impulsively to the downside. So the target of this wave for wave C should be like this. This is wave A, this is wave B. Our next target for this is the area where Uzi is heading to. It is around equality between the two legs is point 69, sorry, 69.40 to 67.70. This is the target area for the Aussie dollar. Let's go to 1 hour time frame. The whole corrective movement. The whole corrective movement is like this. It's A, B, C. This is 1, 2, and we are in wave moving impulsively to the anticipated target area. Whenever we see corrective structures like flags, we can take our entry points. Okay, that's all about Uzi. Let's move to gold. As I shown you, we have failed to make extra leg to the upside for gold, the same as pound and euro dollar. So our next move should be to the downside. Why? I will show you that. We have make our first two legs to the upside. This A, B, C. This is the first two legs to the upside. Then we make another ABC to the downside. This is A, this is B, and this is C. Then we make another two legs to the upside, A, B, C, another two legs to the downside, A, B, C. And this, if we have made to the moment four consequences, consequences in this pair in the form of ABC movement. So the structure is a triangle. The structure is a triangle. So this is the whole structure. This is A, this is B, this is C, this is D, and we gonna see the last leg to the upside before moving impulsively to the downside. And as usual, as you know, triangles are usually in wave force. So the chance that we not gonna see extra movement to the upside from this area, because we have the corrective structure has changed from WXY structure, because last session we anticipated to see an extra leg to the WX and Y to the upside. But now this is not going to happen. We have changed this structure, or the price action telling us that this structure is a triangle A, B, C, D, E. So we can enter after making wave A, or some conservative traders can enter from after breakdown of this triangle to the downside. I will tell you something about gold. As I told you before, our targets is around 1,000, around 1,130 area. But to be honest with you, we may have other counts. I will tell you in time that the whole wave B for gold, let me show you in MT4, the whole movement for gold, okay, has ended. If we go to weekly, okay, as you see from this weekly chart, I will use it so that you can understand what I am talking about. This is wave A to the downside in the form of 1, 2, 3, 4, 5, and this might be wave B. How? This is piece of correction might have ended the wave B. How is that? Let me go to daily time frame and show you how. This is whole piece of correction. The whole piece of correction is in the form of, this is A, B, C, A, B, C, and A, B, C. This is A, this is B, and this is C. And this corrective structure is called, we call it a regular flat. This is a regular flat where wave B is something away from the start of wave A. But if we apply the rules, of Elliott theory, which telling us that wave B could be up to 61.8 61.8 of Fibonacci ratio in relation to wave A. So this is where B might be ended right there. So the whole corrective structure is over. Right.
Recognize that. Could you tell me your password?
This is the whole correction has been ended right there. So in the form of A, B, C, or W, X, Y, as you wish to name it. Okay, let me go back to our time frames and show you our focus in our trading for this week. As shown you, we have a triangle right there, very clear triangle, very clear triangle. for the wave 4. For the wave 4, we will come once we have exceeded the bottom of this. Once we break the bottom of this historical low for gold, we will go in more details about the alternative count, but both counts in this moment, the alternative and the main counts, suit this what our trades for the next 2 to 3 weeks. So this is our triangle with it is 5 legs. This is A, this is B, this is C, this is D, and we anticipate to see wave E from there, and the price started to move aggressively to the downside to 1,130 to 20 area. Okay, thank you for your listening. And then if you have any question, you can contact me on Twitter or on Telegram. Thank you, and see you in another market outlook.